Hello and welcome back to All Things Money. My name is David Blain, and during today's show we're talking a little bit about why I'm not that all enthusiastic about individual investors picking individual stocks, or frankly, even at our own firm, we've largely moved away from the individual stocks. Just to recap, number one, you're not that good at it. Nobody is. If you look at investing, unlike starting a business, let's say you go out and start a business and you think there's a need for a new restaurant, well, you could create something better than McDonald's, or maybe you think you've got a better idea than Walmart, and you go out and you start and you put your capital in. You certainly can become better. You may not put Walmart out of business, but you can certainly make some money on your own. Investing in the stock market, if you're buying a stock, someone else has to be selling it. Now, there are certainly new companies coming to market, old companies that are issuing new shares, but essentially, when you buy something, someone else is selling it. And so for every person that does better than the market, there is pretty much assured someone that does worse. And over time, we see that the average investor does significantly worse than the market. You've probably heard the old, whenever they take surveys, especially driving is the one that I like to talk about. They take surveys of people, and something like 90% of people, when they survey them, think that they're a better than average driver. Well, of course, if you understand the definition of average, then it's impossible for 90% of the people to be better than average. And the same thing with investing is the majority of people think that they're a better investor than average, and when the reality is they're not. We talked a little bit about the competition, the hedge fund, the institutions, frankly, the legal insider trading that goes on. We just saw the scandal with in Warren Buffett's company, David Sokol, who probably was not an egregious instance of insider trading, but it was certainly shades the ethics of what is proper. And this sort of thing goes on all the time. People get rumors of mergers and acquisitions, and I mentioned the example of the drug industry, the release of a new drug. And so there's always an undercurrent of inside information going on. I just finished with John Paulson's book, The Greatest Trade Ever. If you're looking for something to read, I talked about this a couple of shows back. A fantastic book. And you read that and you realize the talk and the day-to-day interaction that goes on between the big brokerage firms and the money managers on Wall Street, and what an important part this symbiotic relationship plays on Wall Street. We talked a little bit about Bill Gates, Warren Buffett. These people, to become wealthy, frankly, had to do everything, make all the wrong decisions and against conventional wisdom, and become very lucky. They had to put all their eggs in a very few baskets and never sell anything. Well, do you know how many people are successful at doing that worldwide? Probably, I would say, less than 100 people that have ever done anything remotely close to what these people have done. Yet there are hundreds of millions of people that own stock. It's just not a good percentage of people that can do that. So anyway, the best investors out there, on average, you're going to earn somewhere between 8 and maybe possibly 15%. These are the top people. The average people, if you can earn 7-8% per year compounded, you're doing great. The average annual return in the stock market since the 20s, is somewhere around 9%, but there are multi-year periods, as we've just gone through, where the return is essentially zero. And so a lot of that average depends on when you're actually investing in history, what time frame. And so, there are some people that are going to do very well, but most people, frankly, are not. And so we recommend that people take a more diversified approach, especially today. There will be time in the future, possibly, where we think it advantageous to go back into individual securities. The volatility right now, the change in economics and things like that, we feel that you can be better off by looking at whole markets, whole countries, different economic sectors, say the energy sector, or just an example. We're not necessarily saying you should do this, but the past 10 years, the energy sector, has done very well. Financials, your return has basically been negative. And so there are places to make money, but picking, whether Exxon or BP or Shell are the ones that emerge on top, we think in today's environment is very difficult and not worth the extra risk for the average individual investor. Certainly, the one advantage that someone has is if you can stretch your time horizon out, and that's what we do. We even, at our firm, there's no sense trying to compete with these high-frequency traders, the day traders, the swing traders, which are basically a week to 10-day type traders. Extremely difficult to make money in that. They're information traders, they're data traders, and frankly, they don't have a lot of concern about capital gains. So even if you're making money on an after-tax basis, an after-transaction fee, even if you're only paying a couple of dollars on a trade, after taxes and fees, we just have not found any individuals that have been very successful over the long term at this type of trading. They just don't exist. If they do, they're not sharing their systems. There's a guy that runs a hedge fund, Simon's, called Renaissance Technologies, and he never gives media interviews. He never gives trading. He just goes out and he hires a bunch of PhD mathematicians. Hardly anybody that works at his hedge fund has a background in finance, and he has virtually no outside investors. It's all his own money and the employees' money, and they don't take other outside investors. And he's probably one of the most successful hedge fund managers out there, but you can't, invest with him. So anyway, if you're investing in individual securities, we just encourage you to take a look at the data, take a look at the competition that you're up against, and really make an honest appraisal of your stock picking ability over time to see if it's worthwhile. We advocate right now for a more diversified global approach. Are you really going to be picking Chinese stocks on this Chinese stock exchange? We think an exchange-traded fund that invests in several, say, Chinese companies is a better way to go. Well, that about wraps up the show for today. We hope you've got some information that you can use and that you will join us again next week. So for All Things Money, I'm David Blain. Have a great week, and we'll see you next time.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.